Welcome back to another scalping lesson. Soil here, and today I want to teach you a 1-minute scalping strategy for catching trends in the early stages of developing. It's very easy and highly profitable only if you pay attention to all the points that I'm going to explain in this video. Just make sure you watch this video until the end so you won't miss any important point. Stay tuned and let's get started. Alright, as I said, this is a 1-minute scalping strategy. So first we must set the chart time frame. On TradingView platform, here we set the chart time frame on 1 minute. This is the price chart of Euro to US dollar of Forex market, but you can use this strategy on any other asset, whether it's Forex, crypto, or stocks. The only requirement in terms of the asset or market is liquidity and trading volume, because this is a scalping strategy and the profit and loss that we're going to take are small in terms of price movements, so we don't want to experience any unreal price gaps or large spread between bid and ask prices, because this can damage our trade entry, stop loss, and profit. In this scalping strategy, we must add 4 indicators. For adding indicators, here we click on indicators and we simply search the name. The first one that we should add is Sniper, and we're going to add this one, FX Sniper T3 CCI, which is written by someone named H. Potter. After adding it to our chart, we must change its settings. Here for CCI period, we set it at 35. We click on OK. And now we must add 3 exponential moving averages to our chart. An easier way is to add a ribbon to our chart, this one, so we can manage all of them here in the settings in one place. We need 3 moving averages, so we uncheck one of them. 3 of them should be exponential moving averages, so we set EMA for them. 3 of them should have lengths of 96. And the calculation for the first one should be based on low, for the second one based on HLC3, and for the third one based on high. We click on OK and it's done. Everything is already set on the chart, and let's see how we trade based on this 1-minute scalping strategy. These 3 moving averages provide us a support and resistance zone. When the price is above the zone, the market is considered to be in an uptrend, so this zone acts as a support level. And when the price is below the zone, the market is considered to be in a downtrend, and this zone acts as a resistance level. By the help of this strategy, we want to catch the turning points of the market where a new trend forms. Let's begin with how we enter a long position. When the price closes above this zone and at the same time Sniper indicator closes above 0 and turns green, it gives us the signal that an uptrend is probably forming. But this is not enough, because by trading only based on this signal, we will encounter many false signals. So we need some filters and more confirmations for any trading decision. First, before this crossing happens, the price must be in a well-shaped wave or a complete swing below this zone. Actually, we must have considerable distance between price and the moving averages. For example, these ones that you see here are not accepted. When the price keeps crossing and moves closely to the zone, it shows the market is flat, and in this situation the number of false signals are considerably high. So please pay attention that we need a well-shaped wave or a complete swing below the zone with some distances from the moving averages before breaking this zone, which is actually acting as a resistance level here. When the price successfully breaks the zone and closes above the zone, which is actually a resistance level here, and at the same time the Sniper indicator is also above 0 and green, we must wait for a pullback to this zone, and we enter a trade when this resistance line, which is actually a resistance level formed by this high, is broken. Why we do this? Because having all the requirements up to here doesn't necessarily mean that the price is gonna advance with high probability. And you can see that the price declined after that, and it could continue to lower levels below the zone and hit our stop loss. And also sometimes here the price goes to a consolidation period, which I will show you later in another example. So we need to lower our risk, and we enter a trade only when we are sure that this is a pullback and the price is gonna advance. So we enter only when this resistance level is broken, which happened here by the help of this candle. So we can enter a long position here at this this point as the new candle is opened. The stop loss for this trade is placed below the pullback, actually below our moving average zone. And for the profit target, we can act in three different ways. One way is set it in advance at the level that makes the risk to reward ratio equals 2, or the other way is to moving our stop loss and lock in some profit. In this method, we move our stop loss below the pullbacks in a similar way that we set our initial stop loss. For example, we can move our initial stop loss to this level when this high is broken, which actually happened here. So when this happened, we move our stop loss here below this pullback. Then we can move it here below this pullback when this high is broken. After that here, and so on. This method will be very profitable when the trend keeps continuing higher and higher. And the third method of taking our profit is when we get the first candle closed below this zone, which at this situation the zone is acting as a support level, so we close our position when we get a candle closed below this support zone. Here the price went below the zone, but not a good shaped wave, very close to the zone, so we don't take any action here. Here we got a very sharp declining of the price, probably a news release or a fundamental effect. And here staying below the zone for a while with an accepted distance from the moving average zone. Here the price crossed above the zone with sniper indicator being green in this situation, and we should wait for a pullback, which happened very slowly here. Here the price couldn't break this resistance level and decline again and forming a consolidation period as I mentioned earlier. So now we should wait until this range is broken, which happened here. So we enter a long position here at this point as this new candle is opened. The stop loss for the trade is placed below the moving average zone, and for the profit target we can take it at the risk to reward ratio of 2, or we can probably take it when we get the first candle closed below the zone, which happened here. Moving on the chart, here after this wave, the price crossed above the zone but couldn't stay there, and after that some short crossings very close to the zone, actually a flat market. Here after this wave, the price crossed above the zone, we got a pullback, but again no success to stay above the zone and couldn't break this resistance level and declined, so not a proper signal based on our strategy. Here also a similar situation. We move on the chart, and here also we got some short crossings, not well-shaped waves, so we don't take any action also here. We move on the chart. And here after this wave, which can be considered as a well-shaped wave, the price crossed below the zone with sniper indicator turning red and going below 0, as you can see. We must wait for a pullback, which happened here. And we must wait for breaking of the support level. It happened here at this point, so we can enter a short position here as this new candle is opened. The stop loss for this trade is placed above the moving average zone, and for the profit target, if we set it at the risk to reward ratio of 2, the profit is taken successfully. But if we wait for the candle closed above the zone, which happened here, we end up with a very small profit. Moving on the chart, here we have another opportunity for opening a short position. Here after this wave, the price crossed below the zone. Sniper indicator is also red at the time of crossing. Here we got a pull back to the zone, and here this support level is broken by the help of this candle. So we enter a short position here as this new candle is opened. The stop loss for this trade is similarly placed above the moving average zone, and the profit of this trade can be taken all the way down here when the price closed above the zone, or you can set it in advance at the level that makes the risk to reward ratio equals 2. In compared to trend following strategies, this strategy has a little higher risk because here we try to catch the turning points of the market where a reversal happens and a new trend forms. So it's really important to manage your risk properly. There is a risk management strategy that is called 1% rule, and it's a very good risk management strategy for scalping. I have a complete guide on this. The link is also placed in the description of this video, and I highly recommend you to watch it because without a proper risk management strategy, you cannot successfully and profitably run the scalping strategy that I explained in this video. Not only for this strategy, but for any other trading strategies that you want to use, it's very important to manage your risk properly. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new video. See you guys in next video and good luck with your trading.